All right, welcome again to myatthemoneymachine.com. I'm Joey. I'm the founder and creator of myatmm.com. And here's just a disclaimer. We are not investment advisors. This is just for education and entertainment purposes only. So now that that's out of the way. All right, so we had a few more puts assigned to us this week. So first things first, going to come through here on the cost basis and go through each one and go ahead and mark it assigned. So first thing is on grab. So grab this put right here. We had, was it both of them? Yep, both of them got assigned. So because the price went below the $3 strike price. We'll have to look a little later to see what it went down to. Actually, let's go ahead and look at that right now. Since it got assigned, let's go ahead and, not those. So grab. Oh, man, I was looking under the options, my bad. Right here, grab 200, 296. Oh, okay, so see, it just barely went under 3, so that's cool. That's actually not bad at all. So right here, they were assigned. We'll go ahead and make it today for the assignment date, even though effectively it'll be tomorrow. So buying stocks, we're getting 200 shares. The assignment price was 3. So go ahead and click submit here. We're going to click save here to get this record to show up down here. It's just a helper record, basically. And this was recorded last week, as you can see right here, and we've already adjusted it for the Robinhood fees. So we'll move that down. We're going to go and record that. So yes, we did purchase it, and this position is no longer relevant. We do have to remove the collateral because now the cost is reflected here. So our overall cost base is $330. So, but right now we're just walking through each of the puts, the put assignments that happened from expiration this past Friday. So first thing, we're just going to go through those. There's 3 of them. So that was the first one. The next one up is rum. So let's go down to rum. Let's see how many were assigned. The $10 put got assigned. So we got several positions here. We got 2 stock positions here. The calls. Now see the calls, this call doesn't expire till December 2nd, so that one's still live and active. This one expired, worthless. So we just pocketed that $5, so that's cool. So let's just go and remove that. Okay, puts. Which put was assigned the $10 put? We had 2 puts. We had a $10 put and an $8 put. $8 put expired worthless, so that one we just collected 15 on and got it. All right, so this one got assigned, this $10 strike, and we got $95 for that one when we sold it. So this one was assigned. Same assignment date. It was on one contract, so that's 100 shares. The assignment price was $10. Cost us $1,000. We can take that position off the board. Here's the newly created one. Just click save to get this record to populate here. Move that down. Click save so it's recorded. And up here, we took both the puts off the board. So the collateral goes down to 0, and I think the shares went down by 100, right? Yeah, because we had one put that expired worthless. So we only have a total of 300 shares. So our cost base is $841 with premium. Without premium, it's $12. So I think we're doing okay on that one too. All right, moving on to the last one. The last put that got assigned was NVAX. NVAX dove this past week. It really tanked. I think it went down like $4 or $5. Granted, it is known to move that much in 1 week pretty easily. I guess I didn't expect it necessarily to happen on a short 4-day week, but it did. So in any case, let's go through here. This call right here, 11/25/26. This one expired worthless, so we'll get rid of that one. This put right here is the one that got assigned. It went below 19. I think it went down to 16. It did really dive pretty deep. So go ahead and assign this one. Assignment type stock, 100 shares. The assignment price is 19. Submit that. Again, click save to get this record to populate. This position right here is done, so we can take it off the board. Go ahead and move that one down and click save so we can account for that. And now we got to come up here and adjust the collateral down to 0 because it's represented in the cost now. And we do have 300 shares, so our cost basis is down to 28. When I first started in this stock, the cost basis was close to 40. It was 40 a share. So I've bought down dollar cost average, so to speak, bought down the average price per share, and our cost basis with premiums down to 23. So, all right. Now that the put assignments are all through, now what we do, or what I do, is I go back to the very beginning of all my positions, and I just navigate through each one of these to see what expired worthless. All right, so this one, Clove, we got a bunch of positions. This one doesn't expire till December 2nd. That's this Friday, so that one's still good. This one's still good, and that one's still good. So all of these are still live on the board. So go to the next one. That's just stock. All right, this one expired on MO, worthless. All right, so we can take that off. MVIS, we had 2 put contracts for 3 that expired worthless. So that was just $12 we got for free. Well, we didn't get it for free, but we got it. All right. These are just all stock positions. This one expired November 25th, so that one is expired worthless. And that was $22 we got for that one. Okay, this one doesn't expire till December 2nd, so that continues to 1 more week. All right, and we are at the end. Okay, so now that we've gone through that, we cleared out all the expired positions. Now what we do is we go back and assess what new positions we want to start this coming week. And the way that I do that is I go back to my dashboard, and I usually just go from the bottom up. Granted, I will admit that this week, since we've been purchasing quite a bit of stocks via puts, so the capital that we have to work with is not as high as it normally is. You only got 2,600 to play with as far as any new puts, like new positions that I can take. So I have to be wary of that because I do want to see about playing both sides of NVAX and RUM still. And that'll require some capital in order to do that. I think I'll still be able to do at least 1 put contract for each because this is down to 16, so that'll cost $1,654 or like $1,600 to do one, and this will cost like $900. So that's about the $2,500 needed. So yeah, we need to probably just avoid doing anything new with these and just sell calls on the rest of them. I will say the one we had grab. So now we're in positions 200 shares in that one. I'm just trying to assess how close we are to like actually making profit or breaking even on this one. The basis is 330. It's trading at 296, so $3. So I don't know. We'll probably just sell calls, and I don't know. But I don't know. We're going to probably just do NVAX and RUM first and see what capital we have left after that, and then go from there. That's probably the best course of action, I think, for right now. So let's just do that, and we can come back to those other ones in a little bit. All right, so let's start off with NVAX, and I'm going to go ahead and open this in a new tab so I can keep referring back to this fairly easily without having to flip back and forth. So let's go ahead and start off with RUM first. Save NVAX for the last one. So right now, we already have a call on one of the positions. We need to sell 2 more calls, and we want to look to possibly do a put. So let's go ahead and look this guy up. All right, so rum. All right, let's go ahead and take care of those calls first. So we have two 200 shares we can sell calls on, because this one, it doesn't expire till this Friday, so we only have availability to do one. That's on 1250. It looks like our break even, cost wise, without premium, is $12. So let's see what the call for 12 on rum is going for. So selling a call this Friday, we want to do the 12. Well, 12's not worth anything. So that's not worth anything. Only the $11 is worth something. So yeah, I will admit that since this first started trading, the prices have been coming down quite a bit as far as the premium available to trade these things on. So let's see, these are 15 and 25. So my cost basis with premiums down here, but I want to kind of shoot for that one. So $12. So that's not worth anything here. Let's go out a week and see. So it's worth a nickel there. And one thing, like I've said before on rum, that's interesting, it only trades in nickel increments. So I wonder what the range is on this thing. So if we did come through here, see, the range is 0 to 20. So it is theoretically possible to get 5 or 10 for this, possibly. And that's what I like to do. So what I'm going to do is I'm going to go ahead and put in an order for 2, and we're going to go ahead and try for 10. It may or may not actually happen. If it does not happen, like tomorrow morning, Monday, after the market opens, if this order does not go through, what I'll do is I'll come in here and I'll probably most likely cancel it and try 5. I'll cancel it and try 5. If 5 still does not go through, what I'll do is I'll push it out a week, and then I'll go for 10 or 15 or whatever the range happens to be then. And that one I'll probably get that to go through. But in any case, that's what I'm just going to try with this one. All right, so submit that. Done. Okay. So that was the calls. So we've making all of the shares that we have are going to be working for us. So that's good to go. So now what I want to do is I want to play the other side of this, because that's what I like to do to drive this down even further. So I'm at 12 right now. So if I buy anything lower than 12 would be good for me as far as bringing the cost basis down. So we're going to sell a put and see 950. It's worth $60, and 950 would bring me down. Let's see, 950 would bring me down a good bit. Do we want to do 950 or 9? I'm going to go ahead and do at the money. I do like doing at the money at least on one side, especially if I can. And on this stock I can, and it will bring the price down. The dollar cost average down is what I mean when I say that. All right, so let's go for this. Not to mention the range is probably 60 to 80 or something. We're about to find out. See, 60 to 85, so I was close. All right, so that's a 15-cent difference, so we could probably only get 65, 70, 75, 80, 85. Sorry, that's a 25-cent difference. So we could probably get 10 or 15 would be 30. So we could probably only get 10, so I'm going to try for 0.7. And we will see if we get that or not. And if not, again, we'll just play with the numbers until it does fill. Tomorrow morning after the market opens, we'll see what that goes. So that'll take 950 collateral to begin that. So go ahead and start that up. All right, so that takes care of rum. So let's go ahead and take care of NVAX, because that's the next one up. So we have 300 shares, no calls. So the calls, we want to take care of the calls first. Okay, NVAX. We have 300 shares. Let me just make sure it's nothing. Yep. All right, So we're going to trade. We're going to sell a call. And we are sitting at 28.26 is where the money is at. We try to target this number, so all the premium we've earned up to this point is profit. If we want to just break even, we target this number. And that's to break even, just mainly to get out of the stock and put the capital to work somewhere else. So we try to go for this one, if we can. So 28, so the best we would probably have to strive for is 28.50 on a call. And I can tell you right now, it's probably worth nothing, just because it's so far up. Yeah, 28.50 right here is zero. What's the break even worth? It'd have to be like 23.50. So 23.50 is worth $3, and that's the break even. So one thing I do like to look at on this, and NVAX kind of skews the whole reasoning behind this, but I usually like to jump over to Ameritrade or Thinkorswim, my bad, and I usually like to start looking at the Greeks a little bit to help make this decision. So what I'm looking at, and if you've never seen Thinkorswim, it is a lot to look at, but after you've looked at it for a couple months, then it starts making more sense. Maybe shorter time frame for some people, but in any case, all right. So the money that I'm shooting for was what, 28.50? Let me go back to hold on. Okay, 28.50 or 23.50. So let's open this up. All right, and we're looking to sell calls. So the calls are on the left side here. All right, so 28.50, and here's the strike prices right here. So 28.50 right here we're looking for delta and this probability in the money. So see, the delta is 0.03, really low, and the probability in the money is 139%. Or sorry, 1.39%, which means the chances of it going to 28.50 is 1.39%, according to Thinkorswim. So anyway, very, very low chance, which is probably why it's worth nothing. All right, so let's go up to 23.50 and see what it says there. 23.50, look at that, it only crept up to 2%. So still superbly low chance it's going to go to that. And again, the delta is 0.03. So here's where some people like to move their target so they can start making some premium on a covered call. Granted, they do take the risk that in the 9% chance, according to this, like if we were to do a $20 call, this is saying there's a 9.48% chance that it will move up to $20 and you'll get called out on this and you'll have to sell it for 20. There's a 9.48% chance that that'll happen, at least based on all the numbers right now. And if you've watched the stocks for any amount of time, you know that this stuff fluctuates a lot greatly throughout the week, and this is just the best statistical analysis based off the numbers at that point in time, and it can change wildly very easily. So I mean, this thing is saying that it's a 39% chance that it'll go to 17 and 16. I mean, that's basically, it's basically very, very biased towards the downside. But I mean, the downside, the percentages aren't that much higher. So anyway, sometimes I like to use this as a guide to determine whether or not, or basically to confirm whether or not I feel good enough to take on that. Like this says it's a 9.48% chance that it'll go up to 20, and I can make like $13 premium on it, which still isn't a lot, but it is something. NVAX moves so much so quickly. I'm just so leery of doing that kind of thing with NVAX. I probably will go for like a 5% chance though. So that's what we're going to do. I'm going to stick to just under 5% chance because I don't really trust these numbers that it's given me here, because I've seen NVAX just wildly move so quickly, so fast. But I will say this: if I went with this 2150, that means it would have to come up what, $5? It'd have to come up $5, and I'm not quite sure what it moved this past week. Let's go look. So index. So this is a daily. Yeah, see, this is just 1, 2, 3, 4. Just in 4 days, it went from like 19 down to 6. So that's $3 it dropped in a week. So it'd have to drop $5 the other way around. So what did this go? 1, 2, 3, 4, 5. So see, wild trading range here. But I will say, after that big drop, it is due for a correction, or at least a bounce of some kind. So since it is looking like it's due for a bounce, what I'm thinking about doing is nothing. I'm thinking about doing nothing and seeing if it does bounce. And the reason why is because if it does bounce, if this does start coming back up, those calls are going to be worth a lot more money to sell for premium. So, Oh, decisions. Let's come back over here. All right. So 2150, 5% chance. It's only worth $6 now. If it does start coming back up, then that means that this is going to go up higher in premium, but my chances of losing money go up too. Let's just see if we can stick to our guns around 2850 and go out in time instead. So 2850 is nothing. Go out a week. Still nothing. That's funny. I don't think this direction's gonna work. Okay, now see, if you go out 3 weeks, it is worth something. 28 is worth something, but not 2850. But I think that plus selling another put on the other end will take me down 26 cents. I think I'll get more than $26 for selling a put lower than that. So what I'm going to do is I am feeling comfortable about selling this out 3 weeks for basically no loss of any money, and this will guarantee that I won't have to worry about if it's going up or going down. So going out this, settling on the 28 for 3 weeks out, I think I'm going to safely do this one. That way I don't have to gamble with the fact that it may or may not go up and down and have to play the Greeks and the percentages and take that chance with this one. All right, I feel comfortable doing this. All right, and we have 300 shares, so we're going to do 3 contracts like this. And the spread's 10 to 11, so that's a really tight spread, so I like that. So $30, I mean, that's $10 a week. That's not bad, considering the weeks before I couldn't get anything on it. So that's not bad, I don't think. Granted, it is on 3 contracts, so that's why it looked like that. So anyway, we're going to run with this. And the funny thing about it is, if the price does start going up, might be able to, roll it into something more profitable, possibly. So we're going to play this and see how it goes. This is a no losing money position, so I really like that about it. All right, so review, go and submit that. Done. Now I do want to play the other side, because that'll pull our numbers down even more and allow us more wiggle room to do some cool stuff with the dollar cost averaging. All right, so we're going to sell a put. Now see, $88 for 1650. See, so we're going to be able to pull our cost down quite a bit doing a 1650. And remember, the last one is 19. So that's what I like about this, is even though the stock price is falling, which is very discouraging, it does hurt to see those negative numbers. But it gives you the opportunity to sell a put down here right at the money for basically full premium. And if it executes, you get to buy it at this price down here, which is going to I mean, if your average is like double this, you're going to drastically start pulling down the dollar cost averaging on your overall average price that you're in this stock, which will just help you in the long run. The only fear of doing this is if you're fearful that the stock is like, if you're fearful this company is going to go bankrupt and it's going to go to zero, then yeah, this is probably a horrible plan. Because I mean, you're going to risk anything you put in there, even the stuff you already have. And if you think it's going bankrupt, you should probably just sell and liquidate position completely anyway and not even be playing with this. But I don't think they're going to go bankrupt. So, I mean, the worst that could happen is it would go down to, $1 or something. But, I mean, you know how many shares you can buy at $1 and really pull the average down to, like, next to nothing? And then if it shoots up to $2, you could pretty much get out of it at that point in time. Stocks always go up and down in price. This stock in particular has always gone up and down in price. I mean, you saw the chart I just showed you a second ago over here. And this thing has been a wild ride for a while. But see, always down, up, down, up, down, up, down. I mean, if history's any indicator, we're looking for another up here before it goes down again. And if I can pull the average down low enough, fast enough, before it hits the up on the roller coaster, it'll come creeping past my position average, and then I can get out and do it again or move on to another stock or whatever I want to do. So anyway, it does take some willpower to get back into a stock that's losing like this. But in any case, that's what I'm doing. And this isn't investment advice. It's just the way I like to play the game. You can play how you want to as well. All right, so 1650. And I have just enough buying power. Now look at that. The price, the range here is not tight. It's big. So what's the difference between that? Might actually have to break out a calculator for this one. So 8 cents. I can go up 8 cents. So I'm going to go to 96 cents. And I mean, look at that. I'm selling it for almost $1 in premium, which means that my entry price is actually $15.50, not $16.50. So it'd have to come down. It'd have to come down $1 for me to break even on just this specific trade, and have to come down even further than that to lose money on this. But obviously it's a stock market. It could do either or. It could go up. And if it goes up, then this 96 is just pure profit, which that's good too. We like that as well. All right. I'm going to review this. Submit it. Okay, this is done. All right, so our buying power went down to 259. All right, so not much to play with there. But we're all going to be focusing on calls from this point forward because we don't have any more capital to put any put plays. Now, that's not entirely true because, like, we're still in this clove position, so that only takes $150 to put a put play because the stock is so cheap. But these are positions held in options. So Mo, we don't have anything going on Mo or Altria right now, so let's go ahead and look to sell a call option. And before we do that, we want to see where we're at on this one over in the cost basis section. So we switch over to MO. Our cost basis is 50.86. If this 50.86 is without premium, this 45.57 is with premium. So if we're looking to break even, which on this particular stock I am pretty much just interested in breaking even on this one to get out of it, because it's not paying much premium at all. I originally got into this one because I thought I was going to go the dividend investing route, which is not a bad strategy. It's just I want to focus my efforts on something that's paying a little bit more premium on a more regular basis. than this one. So, at least in this portfolio. All right. So we're looking at the 50 or the 46. Sorry, the 46 because we just want to get out of this. Not to mention, I think the 51 stock or strike price is not paying anything probably because the 46 was barely paying anything as well. All right. So MOC, it's currently trading at 44.85. All right. So selling a call 1 week out. Now see, this is kind of cool. The 46 is at least worth some money now again. I'm trying to remember. Do we want to do 46 or 40? Now see, that's 57. If I get at least 7 cents, then I could go 45.50 and break even. 45.50 gives me 13 cents, so I would be able to break even if I did this. And now I just got the decision: do I want to break even or do I want to make a little bit of money? But I mean, how much really? We're only talking $6, right? No, I mean 50 cents difference is $50 difference. So it's $50 minus so we'd be making about $45 or something like that. But I don't know. I really would like to get out of this position, and I'm not going to lose any money if I get out of it at this position right here. So 13 cents. We'll pull this down below 45.50. So it'll basically be pocketing 6 cents or $6 and then get out at 45.50 and break even basically. I think I could live with that. All right. So I'm going to do that one, 45.50. So 13.15, I might be able to squeak out 14, and we're going to try to. So we're going to sell a call on this for 45.50, and that's just a week away. So we'll see if it does it. All right, so done on that one. Okay, move on to the next one. So that's MO. Clove is the next one. We got 400 shares, but we do have stuff in play on Clove. So we have 3 calls right here, $2, and then we have 1 call right here. Okay, so we already have all 400 shares accounted for, so we can't do nothing with that. MVIS, we have 200 shares, and we already have 2 contracts right here going already, so we can't do nothing on that. RUM, 300 shares, we have 1 call already there, and then we already wrote the 2, so we can't do anything on that as well. NVAX, 300 shares, I think we already took care of this, right? NVAX, so 300 shares, so 3 call contracts right there. So that one is done. Grab, 200 shares, and I'm looking right here for any open option positions for Grab. I don't see any there, and I don't see any there. So Grab, we still need to write some calls, covered calls. So we have 200 shares available. So again, we got this, but we need to go back and find out what our overall cost basis position is. So come back to Grab. Okay, so without premium, we're setting at 358. With premium, we're setting at 330. Overall average cost. So this one, I will tell you, is one of the smaller stocks, so I'm really just interested in breaking even on this, and just not being negative. So I will be looking at the 330 range. So that would actually put it the premium. Sorry, the stock options go, I believe, in 50-cent increments on this one, like most of them do. At least for the weekly options, they all go pretty much in 50-cent increments like this for the lower price stocks. All right, and it's currently trading at 296. So 350 might be worth something, possibly. Good chance it's still not, but we're going to find out. We have, how many shares did I say? 200 shares to play with. We're looking to sell a call, hopefully in the weekly increment at 350. And yeah, it's worth nothing. All right. So that's to break even. and even 350 would put us a little negative. So that would have to be $4. So we're still setting at the 350, to be honest. Okay, so we can't go down to 3. 3 would put us negative very easily by $50 or so. All right, so we need to stick with 350. So the next option that we have is to go out a week. And also, before I do that, I only have $259, see, so I couldn't. Now, the next thing that I would be looking to do is sell a put. Now, the cool thing to bring this dollar cost average down, which helps sell calls, and it also helps us get out of the stock. So it does two things for us. And I have $250 available, so I could play the put side. Now, I'd have to switch over to puts to see what premium is, and I might just do that because this is the last position we could play with today. And yeah, that matches perfectly the buying power, so I do like that. Okay, well, let's continue with the 350 call because we do need to account for this. So let's go out a week. 350, not worth anything still. Yeah, it's weird how that one's not worth anything. It's just a glitch in the matrix, so to speak. It'll come back to life when. Okay, so now we got some money on here on the table, so we could do that. And this is the funny thing about it is this is 3 weeks out, and if I sell a put this week and I make money on it, and then I sell a put the next week and make money on it, and sell a put the third week. Now we're into this same third week that we're selling this call on and make money. Well, I mean, if I made enough money in the first week or the second week, I could actually roll this position and possibly roll it down, and then get into a money-making position by doing that as well. But chances are these numbers are so low, wouldn't be able to do that. But that's kind of the idea. One of these sides is going to win 100% of the time because the stock can only go in one direction. Best case scenario, the stock just sits there, and then you make money on both sides. So that's kind of the idea behind that. So this one's 3 weeks out. It's the first one that's making any money on this call, and this is a call that will, right now, it will break even. But the funny thing is if I make 8 cents on the put that I'm about to sell, if I make more than 8 cents, then a 350 is not breaking even, but it's actually breaking even on the stock. So I will actually have made, or basically be able to keep all the premium I've ever received. So that actually puts it into a really good spot. All right, so I'm good with that. It is 3 weeks out. That kind of sucks. I hate selling premium out that far, but you know, you got to do what you got to do to make the money to play a safer position, or a safer option, so to speak. So, all right, so I have 200 shares, so I can sell 2 contracts, and the range is that. I can't remember if Grab is one of those nickel, and it looks like it is, because if you look at the premiums down here, see how it's 50, 90, 40, 90, they're all even numbers, or divisible by 5. So here's a good way to do this. And I actually like Robinhood, because if you put like 0.07 in the next screen, it should warn me saying it only trades in nickel increments. And when I traded on Thinkorswim and Ameritrade, it did not even tell you that. You could just put 7 cents and it would just let you go with it. And then the trade would never execute. So, both of them have their cons and pros, but that's one of the cons that I found with using Thinkorswim versus Robinhood. Robinhood actually warned me. So let's see if it does. Otherwise, I'm going to have to knock on wood and say I was not being accurate. So let's see what it does. Yep. Okay, so Grab, below 3. Isn't that funny? Because it's 4 cents below 3. And it trades in 5-cent increments. See? So do you want to update your price from that to 5? So I will want to go down to 5 because not 10. So update to 5. So, all right. So it caught me on that. So that's cool. The funny thing about it is it's 3. So as soon as this thing goes up to 3.15 or something, then next week I can trade at 7 cents or something. That's just silly, isn't it? But anyway, all right. So, yes, this is what I want to do. Submit. So now let's look at the same one. about playing the other side about selling a put, and we want to move it back to December 2nd. So now see here, selling a put for 250 is worth nothing the first week out. Now selling it for 3, which is currently in the money, we can get $10 for, and that's to sell it at 3. Or sorry, to buy it at 3, because we're selling a put. So we'd be buying at 3. And 3 would be lower than that, so it would push that down, which is a good thing. It's always, I mean, whenever you can buy a stock for less than your current averages, that's always a good thing. Now, obviously, you want the number to be a lot lower than this because it'll pull it down even further when you're averaging it, but buying less is always going to bring the average down. It may not bring it down as much as you would ideally like it to, but it always brings it down, and going down is a good thing. It's not a negative thing. So let's see here. Sometimes when it's that close and it's worth money, I might actually do it. Unless let me just go out a week, I'm going to see if 250 is worth anything the following weeks, because it still might not be, because it's so close, see? So now we're 3 weeks out, just like the other one. Now see, going 3 weeks out, the same that we did the call, is worth a nickel then. But I did say, what did I say? I said it needs to come down at least 8 cents to make it an overall winning thing. But granted, we were just looking to break even, so we didn't really care that it did that. If it did it, that'd be awesome. But if it doesn't, that's not the end of the world, because we'd still be breaking even. We're actually going to pocket $20 even on a break even. So I don't know. I'm really tempted to possibly do this, but I really am liking the $3 put. So to kind of make this decision, what I like to do is I want to go look at the chart and just see where this is at. So 250 is what we're trying to sell a put right now. So 250 is right here where this line is. And you can clearly see it has been below 250 on several occasions. And how long ago was that? So this is October. Okay, see, this is a good month ago. This is a good month ago when it was down there. Now, the $3 one is where we could sell a put and be slightly in the money. See, that's up here. So, looking at this, I mean, it's kind of funny, because if you look at this direction here and that direction, it kind of looks like it's in an uptrend, doesn't it? Even though the averages still are not dictating that. They're still dictating it's in a downtrend. But the chart looks like it could be starting an uptrend here. And if it was starting an uptrend, that would mean the $3 put actually would be a pretty good thing to do, because it would probably be pocket that. If it continued to uptrend, it would hit that 350 eventually. But see, 350 is way up here. So, I mean, it's not in the realm of impossibility. It looks like it could happen. But that's the thing about stocks. It could not. It could continue to go down. Who the hell knows, right? It is its own thing. All right. I am interested to see the more longer term picture on this thing. So where's 250 at again? So here's 250. And it looks like it's been bouncing around 250, going a little bit below it, but still creeping back up all the time. What's this low? Yeah, see, the low is 219 in a year time span. So that's back here. So it looks like it's been hitting to the low twos and bouncing. Low twos bouncing. Low twos bouncing. And the high right here in the medium term was like 4. So it looks like it's been going between 2 and 4. Okay. All right, I think I've seen enough of that for right this moment. So, I don't know. It wouldn't be a bad thing if it hit the 3. That would pull it down. So I think I'm kind of inclined to get $10 now versus $5 in 3 weeks. And that would give me more opportunity to pull it down and possibly be able to trade this 3 range next time. So I think that's what I'm going to do. I'm going to come back to December 2nd. Oh, actually, I should have even... Okay, this is going to force my hand. Ideally, I think I would like to play this 300 right here, but I actually can't because my buying power is not 300. So this right here is going to dictate exactly what I can't do. So I cannot do this one at all. So I have to do this one. If I'm going to play at all, if I'm going to do this at all, I have to do this. And I would rather do this to make something to bring in some kind of money, even though there's a low chance this is going to happen. Which is why I have to go 3 weeks out to make it even worth anything. So I'm going to go and do this. I should have just looked at that because that kind of made the decision for me right there. And again, this is nickel increments, so I can't do a 10 cent. So we're just going to do that, hit that, submit, and done. Okay. All right. I think that is it for now. We have covered all the stocks that we are in. All right. So as you could tell on the overall, I am negative overall. Back on this screen. And that's that NVAX position that has been taken. The cool thing about it is NVAX, as you saw from the chart, goes up, goes down, goes up, goes down. And it's in a huge down right now. So it will bounce. Now, how far up it'll bounce, that's always the question. All it really has to do is bounce about halfway to easily pull this 1500 into green. Because I'm working with, I think now 400 shares. Yeah, 300 plus the 100 in the put that I have. And if the put executes, if it does continue to go down, and I do execute that 1600 or whatever I had it on, 1650, it'll pull my dollar cost average even down even further. Because right now it's at 28. I mean, pretty soon this is going to be in the teens to break even. And this will be straggling slightly behind it, but it's going to bounce back up. I mean, stocks don't just go down forever. They bounce. They go up, they go down, they go up, they go down. Now, how far up and how far down, that's always the question. But one guarantee is they always go up and they always go down. That is without question. They always do that. So it's just a matter of getting down and catching up with it before it bounces, and then it should be good. And maybe it won't, but I really doubt that it's going to bounce. And so we will see. So after market opens tomorrow, I'll see what executes, what doesn't, where the dust settles, and go from there to tweak the trades to get them to execute. I'll probably try and record another video about that. As I'm doing that, and also I will be recording the trades that executed in the cost basis to go through here and show you again how that's done. Something that I did add recently is you may or may not notice these collapse things. This is a way to collapse the positions in the stocks so you can quickly go through each stock and see the transactions on each one. And this helps when I'm coming back through to reconcile with Robinhood, because as I said in a previous video, the credit might have been $4, but Robinhood always takes a fee, like a couple pennies out of each one, so I have to come back in here and adjust it every single time. So having this view really helped in that, to accomplish that. But so in any case, again, thank you for your time. This was the weekly review. Do this every Sunday night, and release it Monday morning. And I will do a follow-up tomorrow to go over what happened. Have a good day. Bye.